Okay, so the final video in this financial analysis series is the analysis of cash flows. On the third tab on your Excel file, you have a series of cash flows for the year 2011, 12 and 13. Cash flow analysis is very simple. Let us look at the three main activities which are there for Apple Inc. So Apple Inc. has generated cash flows of $37,000 in 2011, 50 in 2012 and 53 in 2013. It has used money in investments in all these 3 years, and in 2013 it's also used money in financing activities. So let us do a simple common sized analysis for Apple Inc. So I will call this common sized analysis of the cash flows. We're going to take everything as a basis of the total increase or decrease of cash flows in that year. So we're going to divide the respective cash flows as a percentage of increase or decrease in that respective year. Let me do this and drag that. Okay, so what we have is very simple and very straightforward. Apple Inc. has been doing good as far as the operating activities are concerned, but it's been losing a lot of cash in investments. So possibly Apple Inc. has been investing heavily on fixed assets or acquiring new companies and new businesses and so on. So from the operating perspective, it is really good because Apple Inc. has been generating adequate cash. So the cash flow analysis gives us two vital points. The cash generated from operations is quite good. At the same time, Apple Inc. is losing money, or rather investing money in investing and financing activities.